Life insurance is designed to provide financial support to loved ones after someone passes away. But what actually happens when a policyholder dies? In this video, we'll walk you through the process of how a life insurance payout works, step by step. We'll cover everything from filing a claim to receiving the benefits, so you know exactly what to expect during this often confusing and emotional time. Before diving into the payout process, let's quickly recap what life insurance is. Life insurance is a contract between an individual and an insurance company. The policyholder pays regular premiums, and in exchange, the insurer promises to pay a lump sum, known as the death benefit, to the designated beneficiaries upon the policyholder's death. This money is meant to help cover expenses like funeral costs, debts, or ongoing living expenses for loved ones. When a policyholder passes away, the insurance company pays the death benefit to the beneficiaries named in the policy. These beneficiaries can be family members, friends, or even organizations. It's important that the policyholder keeps this information up to date, as the insurer will only pay out to those listed. If there are multiple beneficiaries, the payout is typically divided according to the instructions in the policy. The first step after a policyholder dies is for the beneficiaries or their representatives to notify the insurance company. This usually involves contacting the insurer's customer service or claims department. It's important to have the policy number and the policyholder's details ready to make this process smoother. Prompt notification helps start the claims process without unnecessary delays. Once the insurer is notified, beneficiaries will need to gather certain documents to support the claim. The most important document is the official death certificate, which proves the policyholder has passed away. Other documents may include the original policy document, proof of identity for the beneficiaries, and any claim forms required by the insurer. Having these documents ready can help speed up the process. With all the necessary documents in hand, the next step is to file a claim with the insurance company. This usually involves filling out a claim form, either online or on paper, and submitting it along with the death certificate and other required documents. The insurer will review the claim to ensure everything is in order before moving forward. After the claim is submitted, the insurance company begins its review. This process involves verifying the policy details, confirming the cause of death, and ensuring all documents are complete and accurate. The insurer may contact the beneficiaries for additional information if needed. This review is crucial to prevent fraud and ensure the payout goes to the right people. Sometimes, the claims process can be delayed. Common reasons include missing documents, unclear beneficiary information, or questions about the cause of death. If the policyholder died within the contestability period, usually the first 2 years of the policy, the insurer may investigate more thoroughly. Being prepared and providing accurate information can help avoid unnecessary delays. The contestability period is a specific time frame, usually the first 2 years after a policy is issued, during which the insurer can investigate the claim more closely. If the policyholder dies during this period, the insurer may review medical records and other information to ensure there was no fraud or misrepresentation on the application. If everything checks out, the payout proceeds as normal. Most life insurance policies include a suicide clause, which states that if the policyholder dies by suicide within a certain period, often the first 2 years, the insurer will not pay the death benefit. Instead, they may refund the premiums paid. After this period, the policy typically pays out as usual, even in the case of suicide. Once the claim is approved, the payout is usually processed within a few days to a few weeks. The exact timeline depends on the insurer, the complexity of the claim, and whether all documents are in order. Most insurance companies aim to pay out as quickly as possible to support grieving families. The most common way beneficiaries receive a life insurance payout is as a lump sum. This means the entire death benefit is paid out at once, giving beneficiaries immediate access to the funds. This option is popular because it provides flexibility in how the money is used, whether for funeral expenses, debts, or ongoing living costs. Some beneficiaries may choose to receive the payout in installments rather than a lump sum. This means the insurer pays out the death benefit over a set period, such as monthly or annually. This option can help with budgeting and provide a steady stream of income for ongoing expenses. Another payout option is for the insurer to hold the death benefit in an interest-bearing account. Beneficiaries can withdraw funds as needed, and the remaining balance earns interest. This can be a good choice for those who want to grow the payout over time while still having access to the money. In most cases, life insurance payouts are not subject to income tax for the beneficiaries. However, if the payout earns interest, that interest may be taxable. It's important for beneficiaries to consult with a tax professional to understand any potential tax obligations related to their specific situation. If a policy lists multiple beneficiaries, the death benefit is divided according to the instructions in the policy. This could be an equal split or specific percentages assigned to each person. It's important for the policyholder to clearly specify how the payout should be divided to avoid confusion or disputes. If a named beneficiary has passed away before the policyholder, the payout usually goes to the remaining beneficiaries. If no contingent beneficiaries are named, the death benefit may be paid to the policyholder's estate. This is why it's important to keep beneficiary information up to date. Contingent beneficiaries are backup recipients named in the policy. If the primary beneficiary cannot receive the payout, the contingent beneficiary steps in. This ensures the death benefit goes to someone the policyholder chooses, even if circumstances change. If no beneficiary is named, or if all named beneficiaries have passed away, the death benefit is typically paid to the policyholder's estate. This can complicate the process, as the payout may be subject to probate and could take longer to reach the intended recipients. Probate is the legal process of settling a deceased person's estate. If a life insurance payout goes to the estate, it may be subject to probate, which can delay the distribution of funds. This is one reason why naming specific beneficiaries is recommended. If the policyholder stopped paying premiums and the policy lapsed before their death, there is no payout. It's crucial to keep up with premium payments to ensure the policy remains active and the death benefit is available to beneficiaries. Some life insurance policies have exclusions, specific situations where the insurer will not pay out. Common exclusions include death from illegal activities, fraud, or certain high-risk activities. If a claim is denied, the insurer will provide a reason, and beneficiaries may have the right to appeal. If a life insurance claim is denied, beneficiaries can appeal the decision. This involves reviewing the denial letter, gathering additional evidence, and submitting an appeal to the insurer. If the appeal is unsuccessful, legal action may be an option. An insurance agent can help beneficiaries navigate the claims process. They can answer questions, help gather documents, and communicate with the insurance company. Having an agent involved can make the process less stressful during a difficult time. Many insurers now offer digital claims processes, allowing beneficiaries to file claims online and upload documents electronically. This can speed up the process and make it more convenient, especially for those who live far from the insurer's office. It's important for policyholders to review and update their life insurance policies regularly. Changes in family circumstances, such as marriage, divorce, or the birth of a child, may require updating beneficiary information to ensure the payout goes to the intended recipients. Life insurance payouts can be used for a variety of purposes. Common uses include covering funeral expenses, paying off debts, funding children's education, or providing ongoing living expenses for surviving family members. Beneficiaries have flexibility in how they use the funds. One of the first expenses many beneficiaries face is the cost of a funeral. Life insurance payouts can help cover these costs, easing the financial burden during a difficult time. Planning ahead ensures funds are available when needed most. Life insurance payouts can also be used to pay off outstanding debts, such as mortgages, car loans, or credit card balances. This can help surviving family members avoid financial hardship and maintain their standard of living. For families with children, life insurance payouts can be used to fund education expenses. This ensures that children can continue their studies even if the primary breadwinner is no longer around. Life insurance payouts can provide ongoing support for surviving family members, covering daily living expenses such as rent, groceries, and utilities. This financial cushion can help families adjust to life after a loss. Some policyholders choose to name a charity as a beneficiary. Life insurance payouts can provide significant support to charitable organizations, leaving a lasting legacy in the policyholder's name. Receiving a large sum of money can be overwhelming. Beneficiaries may want to consult with a financial advisor to help manage the funds wisely, plan for taxes, and ensure the money lasts as long as needed. Unfortunately, scams targeting beneficiaries are not uncommon. Be wary of unsolicited calls or emails asking for personal information or fees to release the payout. Always communicate directly with the insurance company or a trusted agent. It's important to keep life insurance policies and related documents in a safe, accessible place. Let trusted family members or representatives know where to find these documents in case they need to file a claim. If the policyholder or beneficiaries live in different countries, the claims process may involve additional steps, such as translating documents or complying with foreign regulations. It's important to check with the insurer about any special requirements. Many employers offer group life insurance as a benefit. The claims process for group policies is similar to individual policies, but may involve the employer's human resources department. It's important to know who to contact and what documents are needed. Some life insurance policies include accidental death riders, which provide an additional payout if the policyholder dies in an accident. Beneficiaries may need to provide extra documentation, such as a police report, to claim this benefit. Some policies offer accelerated death benefits, allowing the policyholder to access part of the death benefit while still alive if diagnosed with a terminal illness. This can help cover medical expenses or other needs before death. If a minor child is named as a beneficiary, the payout may be held in trust or managed by a guardian until the child reaches adulthood. It's important to plan ahead and specify how the funds should be managed for minors. Some policyholders name a trust as the beneficiary. This can provide more control over how the payout is distributed, especially for minor children or beneficiaries with special needs. A legal or financial advisor can help set up a trust. Life insurance is regulated at the state level, so rules and timelines can vary depending on where the policy was issued. Beneficiaries should check with the insurer or a local attorney for guidance on state-specific requirements. To recap, the life insurance payout process involves notifying the insurer, gathering documents, filing a claim, and waiting for the insurer to review and approve the claim. Once approved, beneficiaries receive the payout in the form they choose. Keeping policies updated and understanding the process can make things easier for loved ones. Dealing with the loss of a loved one is never easy. While life insurance can help ease financial stress, it's also important to seek emotional support from friends, family, or professional counselors. Remember, you're not alone during this difficult time. Understanding how life insurance payouts work can bring peace of mind during a challenging time. By knowing the steps involved and keeping policies up to date, you can ensure your loved ones are taken care of when they need it most. Thank you for joining us as we explored this important topic.